Good morning, everybody. Happy Monday. It is November 18th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Let's talk about the markets here. We do this every Monday and Thursday morning, roughly 8 or 8:30 in the morning. I'm coming at you a little bit early today because I'm taking my pup for a walk to the park. Tough week last week, right? Markets finished sharply lower on Friday on pretty heavy volume and very, very poor breadth numbers. You can see over here was 1771 to about 18 to 10 negative. This morning we saw the futures were up a little bit earlier in the session, but it sold off a bit here. NASDAQ up about 40. Dow Industrials down about 70. ES futures are back to flat. Gold is sharp this morning, up about $32, and oil is up a little bit as well too. So what's happening here? Well, of course, Friday was people didn't really pay much attention to it. I did. Big expiration day on Friday. Now it's not your triple witching expiration day like we're going to have in December, but still, there's a large amount of options that were expiring. On the last day of trading on Friday, and closed the business on Thursday into Friday all day long. So a lot of that movement and positioning was done, and we'll have a bit of a spillover effect today. Now, does that mean that the markets are going to get whacked today? I don't know. We'll have to see what happens. We see volatility is up this morning. We see yields are up as well too. You can take a look here at the TLT. When the TLT is down, yields are up. So we see the TLT is down below 90 one more time. We'll take a look at that chart in just a couple of minutes here as well. But I did want to show you a couple of things here. We do have a big week of earnings. Economic data, not so much, not that big of a deal, but we do have the thing that has been tugging at the markets to pull it down over the past week and a half have been yields. Actually, it's been more like almost 2 months, right? And look what happened when right before the first Fed rate cut, which was in September, yields had hit down to 3.6%, and we got that double rate cut, 50 basis points in September, and ever since yields have been on the rise. We've risen up almost 90 basis points in about 2.5 months, 2 months, a little less than 2.5 months. That's a sharp rise, folks. So that's the big move in yield. Bonds have dropped sharply in value. Now, what is the reason for yields to go up? There's two reasons, right? A, there could be stronger growth in the economy, and B, inflation, right? Two things. And we saw last week from the CPI number and the PPI number that inflation was a little bit on the sticky side, right? We've been talking about this for a while. Chris and Lindsay, my colleagues who I do the podcast with on Tuesdays and comes out on Thursday, all three of us been talking incessantly about the stickiness of inflation and how it's just not going away. And that's going to be a problem for the Fed, right? And the Fed is going to put themselves in a situation where they're trying to find the neutral rate. And accordingly, they did say that we really don't know where the neutral rate is. I can make a guess at where I think the neutral rate is on the Fed funds rate. It's about 3.5%, 3.25% to 3.5%. But it's going to take a while for the Fed to get there. They're going to have to see better prints on the CPI and the PPI number in order to get there. What is a better print? That'd be like a 0.1 or a 0 or even a negative number that is really pulling down inflation. Right now, it's sticky at around 3%. And that's not good enough to get the Fed to continue to cut interest rates. So I think what's going to happen is that they're going to slow the roll here. I know that the market is looking at a rate cut coming in December. Let's see the odds there right now. I think it's about 60% chance, 55 now. It's been dropping. It was 70% a couple of days ago. 55% chance now. It's almost a 1-to-1 chance of no cut versus one cut. And then if we go all the way, let's go all the way up to December, right? So we're at 450 right now. The odds are that we're going to get are pretty good that we're only going to get 3 rate cuts, and that's between now and December of next year, right? So we're talking we have 8. There's 8 Fed meetings, including December next year. No, 9 meetings, including December of this year. So 1 here and then 8 next year, right? 8 Fed meetings, and you're going to get to 3 rate cuts in over 8 meetings. So if the Fed is doing what the market is expecting right now, you're going to have at least 5 meetings where there's going to be no movement, where the Fed is just going to stand pat, right? Now, obviously, the market is pricing in that activity right now. But what if they only go 2? What if we get down to 4%, 2 rate cuts? I think the market is going to be highly disappointed in that inaction by the Fed. But we'll see what happens. It's not nearly as bad as it was in the spring of this year, but we'll see how it goes. So the yield again back up to 4.4 something percent, and we're right up to where the Fed funds futures is. So we're at an inflection point here, right? So is the 10-year going to go up and the Fed funds rate going to go down, and are we going to get a upward sloping yield curve, or are we just going to stay where we're at and the market is just going to have to deal with moderately high rates as it is right now? So I think the Fed has a very difficult job in trying to take off restrictive policy, which is what's been happening for a couple of years now. They're making an attempt to do that, but they don't want to take that restrictive policy away too quickly, especially if inflation remains sticky. So they've been talking about this. And even Chair Powell last Thursday in his comments talked about that the economy is not giving them any particular reason to be in a hurry in cutting interest rates. So we have again we talked about earnings earlier this morning, and there's going to be a big week of earnings. Obviously, NVIDIA, biggest name that you have out this week, is going to be reporting earnings after the close on Wednesday. We do have some big retail names as well too. Walmart and Lowe's will be coming out tomorrow morning before the open. Target Wednesday morning before the open. Williams-Sonoma is going to be also coming out on Wednesday morning before the open, and a few other names as well too. Intuit, which is a big technology name. NTAP, we have Warner Music Group is going to be coming out. Medtronic on Tuesday morning before the open. Baidu on Thursday morning before the open. So a smattering of names. Palo Alto also Wednesday evening, along with Snowflake and Jack in the Box after the close on Wednesday, along with NVIDIA. So we have a lot of different names coming out this week. Following week, of course, is going to be a little bit quieter week, a little bit slower week, but a lot of economic data next week. That's the week before. It's a week of Thanksgiving, actually. It'll be a short trading week. Of course, 3 full days of trading next week. Thursday, of course, off Thanksgiving, and a half day of trading the day after Thanksgiving. So as it is right now, as far as the market oversold, overbought, it's moderately oversold right now. The New York Stock Exchange McClellan Oscillator, which measures advancers and decliners on an accumulative basis. This is mildly oversold, minus 122. Now, the NASDAQ, which is the NAMOT, much further oversold, is minus 191. And we've been to this area more recently a couple of times in September and October. So it's been an area where the market has tried to bounce, but it didn't bounce too much on 3 or 4 other occasions when we got down to these low levels on the NASDAQ oscillator. So what could we look for? We could look for a modest bounce, probably. Maybe it just depends. If there's a nice bid in the market today, we'll see the markets bounce. There'll be some opportunities to trade them from the long side. If not, we're going to see the sellers take over, and we'll see maybe a little bit of downside, possibly even probing last Friday's low, which came in right at the 20-day moving average. Let's take a look at that here. Let me show you that here. Let me open that up. and you can see that 20-day moving average held firm at the lows on Friday. Was about 58.60 or so. So if we come down to that level again, test that level, we'll have to see if we make a lower low and a lower high from Friday. That's not good news. And I think the next target is going to be this 50-day moving average. Let's call it 57.73 right now, and it's rising every single day. But that would be about another 100 handles lower on the S&P 500. Would that be a disaster? Of course not, because this is still going to be a higher low than what we made at the end of October, early part of November. It would just be basically getting rid of all that froth that was created from the election results a couple of weeks ago. So, like I said, as it is, I think the markets are in pretty good shape right here. I think we're pulling back, correcting a little bit in front of Thanksgiving. There's an old saying that the bears will have Thanksgiving, the bulls will have Christmas. That's an old saying in on Wall Street, and we'll see if that happens. If that does indeed occur, expect a little bit of a pullback over the next 5 to 7 days. Now, I did look at some statistics from a good friend, Jeff Hirsch, from the Stock Traders Almanac. And what does Jeff say? Historically speaking, if you buy the markets on Tuesday before Thanksgiving and hold it to the end of the year, that it's usually a pretty nice bullish return on the markets over that 5.5 week period of time. So we'll be looking for some trade ideas there as well. Again, breadth is on a sell signal right now. Put call ratios are starting to race higher. Volatility. Let's take a look at the VIX here. Had a big pop on Friday. It really came down sharply after the election here, and hit a huge low here into the 13s, and popped right back up to 16 and change in the final days of the week last week on Friday. And if we fill that gap and we get a surge up there in volatility, you're going to see your pullback, right? So that's just be aware of that. So as far as earnings are concerned, again, NVIDIA this week is something of interest. I see Tesla is up strong today on some news about self-driving vehicles, up about $20 here. Netflix is down. We do see a little bit of movement in, again, NVIDIA. Roku got an upgrade today. And small caps are up a little bit over here. I would not be really wanting to get into small caps to IWM unless it gets a close above 233, 234. So it's a couple more bucks higher from here. I think it's going to be it, everyone. So have a great day. I'll see you guys all back on Thursday morning, about 8:30. And please send this out to anybody you think might be able to use it. Retweet it out or something like that, or send it out on Facebook. And if you're in the chat room, I'll see you in there a little bit later on today. And it's a big night of Monday Night Football. It's the Houston Texans at the Dallas Cowboys. It's a Texas affair tonight at 8:15, 8:30 Eastern time. So get your 10-gallon hats on and watch the game. So I appreciate everyone spending a little time with me, and have a great day. And I'll see you guys all on Thursday. Thanks.
Now everyone watches this primetime show. New York, Nashville, San Francisco. We love to watch the kickoff as the game begins. Pretty cheerleaders and last-minute wins. The screaming crowd and the linebackers stare. Scrambling quarterbacks and receivers in the air. Big hits are coming, the backs are cutting inside. Everybody turns it up Monday night.